Hey, what's up, everybody? Welcome back to Investing Sucks. And today we're going to be discussing what is, in my opinion, the best way to screen for stocks. Now, if you're wondering what this website is that I'm on, this is actually a website that I created. I did a community post on this a while back, but I know not everyone sees those posts. So I figured now I do a full video on it, specifically showcasing this screener and how I built it to be, at least in my opinion, the best screener that there is available for retail investors. Now, there are other features on this website that I want to quickly show you because not everyone saw that community post. So I just want to quickly showcase what those are. In case people are interested in using this website, obviously I'll put a link to it in the description. It's completely free, no charge required. So another key feature is like the companies list here. So you can see we've got a lot of companies. So you could type in the ticker or the company name, and then it appears here. And then there's a summary which shows basically the stock price. It shows some details about the company here that also links to the SEC filings and then also financial statements. So financial statements go back 10 years, which I think is useful because not a lot of websites will provide you 10 years of financial statement data. So that's one cool feature. And then another cool feature I want to show before I get into the screener would be the charts. So if I go here to the charts, you can see there is various economic data that there is. For example, these are data directly from the Federal Reserve, anything that starts with FRED. There's also some treasury data, which is interesting. So you can look at various metrics here. This is all for the US, but say you wanted to look at an individual company, like we'll stick with Apple as the example. Say you wanted to look at Apple's PE ratio, price to earnings. So you could add that in and say, I want to compare that to Microsoft's PE ratio, just as an example. You can put that in and then it'll show the two. We can see they kind of move in lockstep with each other, which is interesting. But yeah, basically what I wanted to focus on is the actual screener technology and what's unique about it and why I think this is much better than what's currently available. So the issue that I've found with most screeners that are out there is they really just allow you to screen very basic metrics based on whatever the website you're using has loaded onto the website. And they don't allow for any customization because there's nuance to every company, there's nuance to every sector, every industry. You're not always going to want to look at the same metrics for every company. And so because of that, a lot of screeners, they kind of limit you in what you're able to actually do with them. So what the goal of this was to provide some element of customization. So, and you can also save your screeners as well in case you want to refer back to them. So I'm going to give an example here. Let's say we want to look at enterprise software companies or just software companies. So I'll title it that. So you can add an industry here, and then I'll just put software and see what comes up, software publishers. So then press the plus to add that in. And then, so MM capitalization, which means market cap in millions. That's what the MM means. So say I want to kind of just weed out some of the garbage. So I want to make sure the company has at least a market cap of 100. So it has to be greater than or equal to 100. So because it's in millions, this would be 100 million. So let's run that and see what we get initially. So here's our results. We can see some pretty familiar companies, CRM, which would be Salesforce. I believe this would be, yep, so this is Zoom. We can see we also got Snapchat here, which you can click and then it'll pop up and then we can look at the details of this company. You see the basic metrics here, like free cash flow yield. A lot of these are more focused on what I'm particularly interested in, which is, more value-oriented metrics rather than day trading metrics like volume and whatnot. But let's say we want to get a little bit more technical and say we're interested in looking at software companies, but we know that software companies tend to spend a lot on R&D. That's usually one of their bigger costs. They have to spend that much on R&D in order to remain competitive. And a lot of companies will spend a lot on R&D as they're growing. And we want to know how profitable the company is. So let's say their operating margin would be if we strip out the effects of R&D, because maybe that'll give us a better idea of how profitable the company is if they weren't just in this hyper growth phase, which a lot of these types of software companies, some of them are. So we hit the add metric button here, and then this comes up. And then here we type in the specific account on the financial statements that we want to, use. And then we can kind of create a formula, our own customized formula. So say we want to look at operating margin. So then we'd have to look at operating income, which would be this. So we enter that in and then press the plus. These are all pretty technical names because they're pulled directly from the financial statement. So it's good to kind of familiarize yourself with this, but usually if you just type in what you're looking for, you'll get pretty close. And then say we also want to add research and development. There's two because different companies, some will call it different things. So I'll add both of these in. Now we got that. And then I can enter some brackets here just to, make sure the math is correct. And then revenue in millions, which would be revenue. So add that in, and then we're going to change this because I can edit it directly in the formula box here. So what we're doing is we have operating income, but we're adding back research and development expenses and then dividing it by revenue. So we're trying to determine what the operating margin is when we add back R&D expenses. So then we hit save. And now it's in the box there, so we can click run. And then we can see the results that come up. So this company here, so this is Intuit, okay? This is a company I'm a little familiar with. So if we look at their financials, let's see what the operating margin is. And if we scroll down to the income statement here, we can see their operating margin in 2021 was about 25%. But as we saw with this screener, it goes up to 53% when you remove the effects of the R&D expense. So, depending on what you're looking at, that might be an interesting insight. It would be good to compare what their operating margins are with and without R&D expense. Or if you just wanted to look at their R&D expense as a percentage of revenue, that would also be something useful you can look at. So that's one example of something we could do. Another thing that we could do would say we wanted to look at bank stocks, but we want to look at bank stocks that are below book value. So we'll type in the name here, banks below book value. So we want to make sure we put in the right industry first. So put in the industry and say specifically there's different types of banks, but we're interested in commercial banking. So put in commercial banking and then add that in. And then again, let's also put in a country filter. Say we just want to look at US banks. So we can put in the country, make sure it's set to US. And then again, I kind of want to just weed out some of the garbage. So make sure that there's a capitalization that is greater than or equal to, we'll put 100 million again. So add all that in. And now let's add the metric. And because we were looking at book value specifically, let's type in book value. So book value, which is book value in millions. Then we put that in, and then market cap, which is just capitalization here. So add that in, and then it's going to automatically go to a plus, but say we want to make sure it's divided here. So we have book value divided by market cap, or we could reverse these to make sure it's market cap divided by book value instead. So we'll hit save there and then run and then see what our results are. So now we can see what some of the results are, and say we're specifically interested in companies that are trading below their book value. So then we'd want to find a ratio below 1. So I keep scrolling down in this rank column, which this rank column tells us the calculation for the metric that we just put in. And here we go. So here are a few commercial banks in the US that have capitalization that is currently below their book value. So you can see, let's click on one and just see what comes up. Fulton Financial Corp. Okay, this isn't one that I've heard of, but again, we can check out their financials. And even if you wanted to look at the SEC filings, you could do that here as well. And then, but let's say we wanted to get a bit more specific. So let's remove this, but let's stick with kind of the banking theme. So we'll add a metric and say we want to look at companies that have a lot of cash relative to how many assets they have, or banks that have a lot of cash. So we can type in cash and cash equivalents. Again, it's a bit of a technical name. And then assets in millions, which would just be assets. So add that in. And then change the plus to a divide. So which banks have the highest cash balance compared to their total assets that also meet all the other criteria that we put in. So let's run that. We can see it's this one here, PFHD, which is Professional Holding Corp. It's a pretty small company, only $311 million. Let's see what this one is, for example. Signature Bank Corp. Okay, this one's a bit bigger, 19 billion. But you can kind of see what I was trying to get at before. This feature is something that other screeners don't really have, and it allows you to get very, very creative in what you want to look at, which I think is important when you're going the route of being an investor and choosing individual companies, because you do kind of have to look at things that other investors aren't looking at, and you got to be a bit of a contrarian, right? You can't just look at all the metrics that everyone else is looking at and then expect to gain some new and innovative insight from doing that. So that's really the goal of what I was trying to do with this. So I hope you guys find use in it, and if you do have any questions about how to use it, or if you're confused, then feel free to just send me an email. I'm generally pretty responsive by email. I know some of you guys email me pretty regularly with questions you have, or you just want to talk about stuff. All totally fine. I'll try to respond to emails as soon as I can, but I do also have this survey set up here as a Google form. So if you want to give me your feedback on the website and maybe a feature that you suggest or an improvement you suggest, I might actually end up implementing in this, because the whole point is I want to make it very usable and actually useful for the average retail investor to use. But anyways, guys, that pretty much does it for this video. So again, thank you so much for sticking around and listening. I hope you do find this useful. If you do, then please leave this video a like and subscribe if you are new to my channel and you like this type of content. And I'll see you guys in the next video.